A single man earned $46,500, received $1,850 in interest from a savings account, $15,000 in winnings on a TV game show, and contributed $2,300 to a tax-deferred savings plan. He is entitled to a personal exemption of $3,800 and a standard deduction of $5,950, but the interest on his home mortgage was $6,500. He paid $2,100 in property taxes and $1,855 in state taxes, and contributed $3,000 to charity. He further received a $750 tax credit. And what we want to do is determine the man's income tax. Okay, a lot of details here, but we're basically going to go through all of our steps to get each part along the way, where the first thing we need to do is find his gross income. And I'm just going to call that gross. And I'm not going to put dollar signs in here just because it would take me a couple of extra seconds each time. That's going to be quite a few. So we have the income there of $46,500 along with the interest there of $1,850 along with the winnings of $15,000. This guy's had an odd year to be winning $15,000 on a game show, but all that adds up to $63,350. A pretty good year, I'd say. Where from there, we want to be able to turn that into the adjusted gross income, the AGI, where that is going to be the total there, $63,350 minus the adjustment from the tax-deferred savings plan. So that was, where did we have that? Geez, there's so many details in here to follow. Around $2,300. So the adjusted gross income for this man is $61,050. Make sure I have that right. There are many dollar signs on here. It's easy for me to lose my place, but I think I've got it. Next, we need to be able to get the taxable income, where if we need the taxable income, we need to find out what the sum is for exemptions and deductions. It might be tempting to just go with the standard deduction and the basic exemption, which would give an amount of $97.50. However, in this case, because of his specific itemized deductions that he would get from the $6,500 home mortgage alone is more than the standard deduction, along with the $2,100 in property taxes, $1,855, yes, in state taxes, and $3,000 to charity. Like I said, this is a weird year, I suppose. He's paying a lot in mortgage, and he won a lot of money, and he gave a lot away. His deductions here going itemized, so I'll call that itemized deductions, will end up totaling $13,450 up to my, oh god, that 5. I don't know what's wrong with my 5s right now, but that's the amount of money he would get. Yeah, it's a weird amount. But from there, oh, that shouldn't just be his deductions, itemized deductions, plus the exemption, because the exemption is included in there if we want to get his taxable income, which I'm just going to abbreviate as tax income because I'm running low on space. This is a big example. If you can't tell, these do take a little while. We are going to end up taking his adjusted gross income of $61,050. And to be clear, this is not the sort of process that you have to do on your own. This is the sort of thing that the filing services you'll work with will help you out with. But you know, it's good to see where these things come from. You take all that and you subtract from it the sum of the deductions and his exemption, $13,455, and you will end up with a total taxable income, or he will end up with a total taxable income of $43,795, which if you've ever wondered why, if you're doing like TurboTax or H&R Block or whomever, why your taxable income always looks much lower than your actual income, this sort of thing is where that happens. So now that we have his taxable income, we can actually find out how much his income tax is by looking back at all of those brackets, where we would have that the first $8,700 falls into the 10% bracket, then the amount above $8,700 but below $35,350, which would be $26,650, will fall into the 15% bracket, and the remaining amount above that will fall into 25%, which is the $43,795 minus that $35,350 is $8,445. Like I said, progressive tax means that each of those brackets gets their amount rather than all of this falling into the 25%. So you ever see that stuff where people are like, well, I'm afraid to get a raise because it means that I'll fall into a higher bracket and I'll just end up paying more.
Speaking of which, do you think that you could give me my $20,000 in cash? My concern is, and I've got to check it with my accountant, but that this might bump me up into a higher tax.
That's not how it works. You'd only pay the amount on the amount. You only pay the higher taxes on the amount in that bracket. You'd still end up making more money.
Donnie, you're out of your element.
This is a lot, though. But finally, if we want to get his total tax computation, this would end up coming from a couple different parts. We'd have that 10% times the 8,700, 15% by 26,650, 25% by 8445, which would leave us with 870, 3,997.50 cents, and 2,111.25 for a total in that tax payment of $6,978.75, where because he has that tax credit at the very end of all of this, we're going to remove $750 in that credit. Like I said, credits get accounted for at the very end. So his final tax payment will be $6,228, and 75 cents. I'm a little tired of saying numbers, stumbling over basic ones at this point. It is a lot. That's why I generally don't do a whole lot of this work by hand. That's why a lot of this stuff is just handled by the computation services, because boy, it take a bit of concentration to get all this stuff just right on your own. That's why we're glad we don't do that stuff quite as much on our own anymore. This is how it would work. And the last thing I'll look at for this section is another form of taxation that we do have to pay, which is our Bica tax. That is tax towards federally covered insurance, especially for senior citizens, and that's what we'll get in the next bit.